Hi, everyone. This is Pam Fender, and I'm here with Cole. And Cole is going to be discussing the mortgage. Why, renting, lending, right?
Yeah, definitely. I appreciate you having me. So,
Yeah.
yeah, I'm looking forward to talking to everybody about a potential event we have coming up that I would love for you to join us at. But before we do that, I mean, Pam, I know we've talked a little bit about some different questions that buyers
Yeah.
are giving you, and
Mhm.
let you just kind of ask away, and I'd be more than happy to give my
Yeah.
guidance.
So, based on some of these questions, I actually did some background research, and it looks like a lot of renters have some very generic questions, but they don't have answers to them. So they're so afraid to come to you because they don't want to be judged, right? But and he doesn't know the questions I'm going to ask. So I'm ready to just give you a heads up. But they want to know about credit score. They always, and I think when we've done these events together, everybody thinks that the credit score is not good enough to get a mortgage. That's usually the status quo, right?
Yeah, I talk to people all the time and they're like, "Oh, I don't know if I'm ready. Like my credit's not great." And frankly, what we find sometimes is, yeah, I mean, there are situations where credit is not in
Mm-hmm.
good shape, right? But
Yeah.
then there's other situations too where credit is actually a little bit better than they expected.
Mm-hmm.
So a lot of individuals are using Credit Karma, like the bank apps, which
Yeah,
are all fantastic apps, and I even check my own score on there.
I do too.
But frankly, as I have to explain to everybody, the algorithms are going to be completely different depending
Mm-hmm.
on the industry. So I always tell people you can go car shopping, mortgage shopping, and credit card shopping, right? So three different credit pools, go see three completely different scores.
Okay.
And it's simply just how the algorithms work and how different things carry more weight than others. So people come to me and say, Credit Karma says my score is at, 620. And then we'll pull on the mortgage side. Sometimes it might be a little less than 620, sometimes it
Mm-hmm.
might be higher.
Mm-hmm.
So my biggest recommendation is it's never too early to start the process for game
Mm-hmm.
planning
Mm-hmm.
because a lot of lenders nowadays can actually do a soft credit check. So it's very similar like Credit Karma, right? Where you'll get those soft credit pulls, but it doesn't have any impact on your score.
And I think this is why we host our events. A lot of people, if you go on Eventbrite and you see that there's 4 or 5 other realtors that are hosting these events, and they're like, oh, they're trying to get business. But for us, the way that we feel about this event and the people that we actually invite to it is it's a community event because you usually do not want to call Cole. By the way, he's not going to bite, but most of the time you don't want to call Cole and ask him questions about buying a home because to your point, you're unsure, right? But with this event, you get to meet the attorneys, you get to meet the inspector, you get to meet the insurance people, you get to meet everybody and have a conversation to where you're not being judged. I think a judge is a big piece that my clients tell me that they don't want to call you because they're judged. So I think this is why we have our event that we're going to talk about. But I think in the grand scheme of things, rents are getting kind of high. House prices aren't really truly going down. What's your advice on all that?
Yeah, so the renting versus owning thing is kind of one of my favorite topics, right? And it used to be a couple of years ago where it was kind of, with lower interest rates, it was a no-brainer. Like buying a home was pretty much cheaper almost right out of the
Mm-hmm.
gate in most scenarios. But now interest rates are a bit higher, which is unfortunate, but
Yeah.
we got to remember that markets are cyclical, right? I think we're like 2.5 years in now to higher rates. So things are going to get better. It's
Right.
just a matter of time, hopefully sooner than later.
We're not getting back down to the threes, guys.
No, that's so important to understand, guys. That whole COVID scenario, that was maybe once in our lifetime. I don't want
Right.
to say once and forever, but maybe once
I'm
in our
holding on to
lifetime.
that loan. I'm holding on to that loan.
Yeah, that's right. That's right. So, nowadays, right, like on the surface, it is cheaper to rent,
Yeah.
right? But you got to really look under the hood. So, like, if you're somebody who's only going to be owning a home for like a year or two, and then you're going to sell it and move on or move somewhere else for a new job, right? It's probably not going to make sense because you're going to have closing costs and all
Yeah.
that associated as well. But what we find when I run these buy versus rent comparisons for individuals is over time, buying a home is definitely cheaper.
Mm-hmm.
And there's a couple things that are working in your favor when you purchase a home.
Okay.
Right? You're going to have amortization, which is the process of paying down your principal loan balance over time, right? And you're also going to have appreciation, which is the home's value going up over
Right.
time, driven by the market and market factors.
Right.
So those two things working together, right? Your principal loan balance coming down, your home price going up, you're going to gain equity.
And when you say that, let's dumb it down for us, for me. We'll do it for me. But when someone pays their rent payment, and let's just say it's $2,300, and then you're paying a mortgage, let's just say even the mortgage is 2,400 or even 2,450, right? The 2,300 you're paying your landlord or apartment complex is that it stays the same.
Yep.
It's the same. They can raise it obviously, but it doesn't do anything. It's almost like the stock market. So the $2,400 that you're paying to what he's saying actually decreases the mortgage over time where you owe less and you start to gain equity in the home. So remember, renting is flat until your landlord raises it because they're not going down. But here you're actually building equity. And so when you're talking about this, that's the buy rent comparisons you do, right? For people.
Yeah, that's correct. Yeah. So think about renting, right? You're paying the landlord, right?
Mhm.
So that money is not being invested, if you will, right? When you're buying a home, yes, a good amount of your payment's going to go to interest, especially at the beginning of the
Mhm.
term, if you do like a 30-year fix, for example. But over time, you're going to begin to pay more principal than you are interest. So that's where you're really going to see that principal loan balance go down.
Yeah.
And it's going to help you boost that equity because at the same time, too, your home value is going to be going up,
Mhm.
ideally, right?
So the day you decide to move out of your apartment complex or you decide to move out of your house, what's the difference?
Well, so okay, yeah, that's a great point there, Pam. Because when you move out of your apartment complex, if you were a good tenant, you might get your security deposit back.
Yeah.
But when you move or you're going to sell your residence, well, guess what? It becomes a payday for you,
Right.
right? Now you're actually getting some of that equity where you can realize it,
Mhm.
and put that money in your bank account to be able to go buy, a couple more properties or go buy another,
Right.
primary residence that's even bigger and more fitting for your family.
Well, it's funny that you bring up the word bigger. And by the way, bigger isn't
Probably
always
not the best word.
no, because it brings up a good point because a lot of times when we do these first time home buyers events, people don't have any expectation on what kind of home they're buying or what can they afford. And what I find interesting is that some people are like, oh well, I want a house on the water or I want a house here and that. If you start early enough in the home buying process rather than renting, by the way, renting does have its merits. That's not what he's saying. But when you're talking about the rent versus buy, what happens is that you're actually building towards that home. A lot of times it takes a couple steps to get there. So you may buy a home for 300,000 as your first home. When we've done our home buyers event, sometimes we've seen people buy 450 or 500, but they might have pushed it. Does that make sense? Like they might have waited longer in the renting game to where they can afford more, but they probably should have started renting 10 years earlier, right? So
Yeah, and there are many times where individuals come to me, right,
Mhm.
and we decide together, right, with giving them knowledge, right, because knowledge is power,
yeah,
that it makes more sense for them to rent.
yeah.
Maybe they're just not financially ready. They
Mhm.
don't have the down payment, the closing costs saved up, or the payments are just, a little higher than they can afford. And it's my goal as an advisor to make sure we are putting you into a smart decision.
Right.
So if it's not the right time for you, guess what? It's not the end of the world. Maybe it's a no right now, but it could be a yes later on down the road.
But you heard the word he's used advisor, so that means that he's planning. It's a planning process. A lot of people when they're I'm gonna say their lease is getting up to that point, I feel like sometimes they call it's too late.
Yeah, another time frame is another big thing I like to talk to individuals about. So, like example, this morning, I was talking to a client of mine who's looking to now turn her home into a rental and purchase a new home.
Mhm.
Well, come to find out through the kind of reconnection call, she's now a 1099 employee.
Mm.
So thankfully, she's been in the 1099 role for the last 4 years. So we've got plenty of history there.
Mhm.
But I'm glad she reached out to me early in the year
Yeah.
because now she hasn't filed her tax returns yet for 2024. And being that she's a 1099, we have to look at the last 2 years of tax earnings. So now we're able to properly put a plan into place to
Mhm.
figure out how much she needs to claim to be able to afford
Right.
a home this year.
Right.
So that's why I think it's always great to start the brainstorming process sooner than later. So
Mhm.
for the exact example you were talking about before I got off track, I apologize, but is, individuals reaching out a little bit too late, right? So like a lease coming up and now we want to purchase, but we're really under the gun.
Mhm.
I would say it's never too early, but ideally you want to start that conversation with the loan advisor probably at least 4 months before you need to be out of that lease.
Yeah, and I think with shopping for houses, depending on the price range you're in, sometimes you're almost 6 months because you really sometimes if the credit's not perfect or if there's a loan program, because some of the grant programs, and we haven't really touched about that, but some of the grant programs run out of money. And so when you're looking at these different programs, sometimes it makes sense to buy a little sooner.
Yep.
We had a client just recently actually, and he was renting all the way up until January. And when we started looking, we started looking in July.
Yep.
And when we did that, it's because his price point was, by the way, the average of the area, but you want the best house that makes sense for you for that same price. So let's say there's 4 or 5 houses out there. When there's 4 or 5 houses, but it doesn't fit what you want or the floor plan, things like that, you literally have to shop, and you don't want to be rushed because you're at the end of a lease. So by the time we were done with him, you got him all queued up. Like, I mean, you pretty much in the very first month in July, you had him all set.
Yeah. Yep.
So then it wasn't stressful. And what my point is that is when they're calling you in the last 4 months and they want it, and I'm taking you out shopping for a house, like we're looking, and we're probably looking with one of our clients. I mean, me and her were out, I don't know, every day
Yeah.
it seemed like, but it created a little stress. And she was a superhero about it, but he's calling her for paperwork. I'm taking her out, and we're running back and forth, and she needs to have a life, and she actually has a full-time job at the same time, probably working a lot of hours.
Yeah.
And so, but with the other client we had, because we had him all queued up ahead of time, we literally had almost 4 months for him to shop. And in his situation, he was able to actually buy a house that needed a little bit of work. And in his last month, he was able to actually do some of that work before he moved in because he had his apartment still.
Yeah, yeah. And you make a great point. I didn't think about that as too, like, yeah, when we go through the pre-approval stage, right, we're going to need to ask you for documents, right? Some people a little more organized than others. So I can be a little stressful trying to dig all that out. And at the same time, if you're waiting till the last second, well, guess what? They're visiting houses with you as well. It becomes very stressful. So
Yeah.
if we can take care of the mortgage qualification part up front, well, then now you can just enjoy the home shopping
Right.
side, and you don't have to stress about
Right.
what you can afford and having to get all these documents into your lender. So I think, preparation is key, and definitely don't wait till the last second.
And I think that's why we host the home buyers event. When we're doing the home buyers event, it's to kind of get people to say, listen, there's no judgment here. We all were in those same boats. I mean, if you ever look at my YouTube, I have a video about, how I got started and borrowing $3,000 from my 18-year-old brother just to help for my down payment. Right.
Yep.
And they didn't have grants back then. But everybody goes through these steps. I think when you're looking at me or you're looking at Cole, like we're in the industry, and yes, we both own homes, but we have some of the same struggles when we're buying that you do. So I think in the big picture, again, renting's not always bad, right? There's definitely circumstances for that. But what other advice do you have for people when it comes down to the lending process?
Yeah. So, one of the things I'm talking about right now is, individuals look at these higher interest rates, and, immediately you're like, all right, I do not want to pay these rates. Right. So I'm going to wait for rates to come down.
Yeah.
Well, guess what, guys? None of us have a crystal ball. I mean, it could be next year. It could be 3 years from now. And as Pam alluded to earlier, more than likely we're not going to see 3 or 4% rates for a long time, right? So that's great. If it's not the right time for you to buy, be my guest and wait.
Yeah.
But if you can afford to buy, here's why it makes sense now, right? It's the simple supply versus demand side of things,
We
right?
do have some supply.
Well, thankfully, supply has gotten better, right? And I think
it's not in the negatives anymore.
No, it's not. And it's funny. I saw a graph the other day. We're actually still pre-COVID versus post-COVID. We still have a shortage in supply. Obviously, COVID was insane with all that. So we're still short on inventory levels, right? So I can tell you right now, even at higher rates, there is quite a bit of demand out there in the market.
Yeah.
And thankfully, supply is getting better, but we're still not to where we need to be. So what's going to happen when rates do come down, right? Even more buyers are going to flood the market.
Buying frenzy.
Correct. And yes, supply will continue to get a little bit better. But another thing you got to think about too is how many people on the seller side, right? People who own a home who have these low interest rates. Yeah. So we call it the rate lock effect. So what's it going to take for rates to get to the point where they're going to sell their house, right? So yes, that's going to create more inventory, but what's going to happen when they sell their house? They're going to have to go buy another one.
Right.
Not in all circumstances.
And that is one of the reasons why people aren't listing their houses, is because they're like, yeah, I see some houses I like, and yeah, I have equity from COVID in my home, but what am I buying? Some of the mortgages are going to be the same. I mean, so they're not actually reducing the monthly cost in purchasing.
Exactly. So it's a cost trade-off, right? And what's the beauty is, like, real estate's always going to be driven by the 5 Ds, right? Divorce, diapers, diplomas.
Oh, I didn't know about the 5 Ds.
Well, and I
always said life events.
Yeah, the 5 Ds. Yeah.
But I didn't know about the diapers.
Yeah, so like having
Cole, are you trying to tell us something?
diplomas,
are you having a baby soon?
Nope, not every year. But what I mean by that is, look, people are always going to be buying and selling real
Yeah.
estate, right? Because life events are
Yeah.
going to happen. So
Yeah.
you just kind of get back to what I was going to say. It's like, it's if you're going to wait for lower interest rates to
Mhm.
come down, there's only going to be more demand, and it's going to continue to push home values higher.
Especially in Charlotte. I mean,
Correct.
location is a key piece when it comes down to, the equity
Yep.
and the actual, I want to say the deficit that we have, because I looked at the numbers. It's 177 people that are moving to Charlotte every day right now. Greenville actually is beating us as the top spot here in the Carolinas to move to now.
Greenville, North Carolina?
Greenville, South
Oh,
Carolina.
South Carolina.
Yep,
Gotcha.
Greenville, South Carolina. But at the same time, it is still a lot of people from the north. There's some people moving back from Florida, which this stuff matters to you, even when you're renting, because those are the people you're up against. Some of those people have different price points that they're buying in, and they're moving into this market. So I did see some stuff on social media about like, hey, the cost of wait and things like that. And it does seem kind of scary where you're like, holy cow, if I wait in even 6 months, I could be up another $20,000 in what, the home's worth. But the buying power is not there because the Fed went down the rates, right? But mortgage seemed to do what?
Yeah, so that is a very complicated kind of scenario.
Sorry
Right?
to put you on the spot.
No, you're good, right? I'm trying to break this down in as layman terms as possible. But
Yeah.
yeah, no, that's been the case. I mean, the Fed's cut rates a couple times now,
Yeah.
right? And unfortunately, we've seen interest rates remain elevated, right? They haven't really followed suit. So, kind of explain it this way: is the mortgage bond pricing market, which is what
Okay.
drives interest rates.
Mhm.
They're always looking a mile down the road. Okay. So they're always going to be proactive, not reactive to news. So if the Fed's been talking about cutting rates, well, guess what? That's already being priced into mortgage interest rates.
Okay.
So they're thinking of it in advance. So what gets us in a pickle, for example, like in the December Fed meeting, Jerome Powell came out and I think they were supposed to cut 4 times in 2025. And he's like, well, the market's still being resilient. We're only going to cut twice. Well,
Mhm.
guess what? That was a shock
Right.
to the interest rate market. So instead of mortgage rates reacting positively,
They went up,
they
right?
reacted negatively.
Right.
Okay. So that is what's kind of coming into play. There's really two indicators that are going to drive mortgage rates in
Mhm.
2025. And those two things got to do with the economy.
Okay.
Number one is going to be inflation. Okay. And number two is going to be.
Inflation's been a big problem for 2 years while the rates have gone up, right?
That is correct. Yep. Because kind of think of it this way, right? So, you have stocks and all that on one corner and you got bonds on the other quarter, right? So stocks, they're going to have higher earning potential and
Right.
also higher risk of loss.
Right.
Whereas a bond's going to be more of like a fixed asset in most cases, right? Like you're investing into a bond to get a fixed return.
Right.
So think about it this way. If inflation continues to go up, you're in that bond at a certain price. So if inflation goes up, that bond is worth less than you, right? From the cost of money
Right.
standpoint.
Mhm.
So, but if inflation goes down, now that bond is worth more,
Right.
right? So inflation can erode the earnings of a bond.
Mhm.
So ideally, we need to see inflation continue to come down.
To meet the bond amount.
Yeah, because if inflation,
Ooh,
Yep.
sorry, guys.
Yep. So if inflation continues to come down, now there's more value in those mortgage bonds. So
Okay.
mortgage interest rates are going to get better. So that's one of the things we want to pay attention to. We want inflation to continue coming down. Slowly getting there. I am optimistic we'll continue to see it get better. in
No more
2025.
shopping, people. If you're buying a house, we're not buying new cars. You're not going to Walmart and spending your whole entire paycheck on there, right?
Yeah, save your paycheck,
Save your
right? Especially
paycheck.
if you're thinking about buying. Don't be taking out
Yeah.
new loans without
Right.
talking
No
to
new loans.
a loan advisor first. And
Yeah.
then just to transition to the other side of things is
Yeah.
the employment numbers. Okay. So,
The job, as they call it, the job.
job creations.
Okay.
And then, if you really want to simplify it, kind of pay attention to the unemployment rate because
Okay.
they kind of go hand in hand. So, we need to see the employment market start to give way a little bit. What I mean by that is,
Mhm.
we don't want anybody to lose their jobs. And
Mhm.
it's very sad to see that. But as the employment market gets worse, the Fed's going to be under pressure to reduce that federal funds rate lower, which in turn will impact mortgage rates.
Right.
So if the unemployment rate ticks up and inflation continues to come down, we
Mhm.
should start to see some better interest rates.
Right. And not to get too far off task, but in that discussion, just remember with interest rates, when the interest rates fall below a price that we're paying other places to get the money, we're not really in a viable position. So we're borrowing money as a country from other places.
Yep.
and they're giving us money at a higher rate sometimes than what our interest rate is. And now we're kind of upside down. So, you're borrowing higher, but you're giving it out less to kind of spur the economy. And that causes problems too. So we have to get to your point, a little happy medium to where we might be borrowing money, but we're also making money off the money we're borrowing as a country, right?
Yeah, yeah. And that's kind of another thing. This is kind of a little bit more advanced level, but another kind of disconnect for interest rates over the past year and a half has to do with servicing values.
Mhm.
Okay. So typically mortgage rates will follow the 10-year treasury yield kind of indirectly, if you will. It's kind of the best indicator to figure out where mortgage rates are heading. Okay.
Okay.
So I didn't look this morning, but I want to say the 10 years probably somewhere around 4.5, somewhere
Okay.
in that ballpark. Okay. So in a normalized market where there's not a ton of volatility, mortgage rates will typically trend anywhere from 175 basis points to 200 basis points higher. Bring
Okay.
that into layman's terms. So 100 basis points is 1%. Okay.
Okay.
So 200 basis points would be 2%.
Right.
So if the 10-year treasury is at 4.5,
Then we're at 6.5.
then we should be at 6.5. But
But
here's where
we're trending higher.
here is the disconnect right now. With the amount of volatility and how volatile rates are, there is no servicing value in these loans for the investors on the secondary market.
Got
Okay. So for them to make money, they want to make sure that that mortgage is going to stay open for a certain period of time. The reason why they're charging a little bit of a premium right now is because things are so volatile. So rates could come lower
Mhm.
and these people are going to refinance.
Got it.
So they're collecting a little bit more of a premium because of the uncertainty of how long this loan is going to stay on its books.
Right.
So that's kind of the big reason for the disconnect. So in a normalized market, we will start to see rates get better just from the yield spread premium alone.
Right.
So now we'll be a little closer to that 2% kind of threshold of what the 10-year treasury is. So we want to see that 10-year treasury continue to come back.
So, when you're buying a home, and so let's just say you're in your job and you're talking about buying a home, education is power.
Yep.
Sometimes when you're just like, oh, I don't still understand this, what he's giving you right now is a little bit of education so that you can use it to power, again, buying a home. When you go into your career, you get trained on those pieces, but there is no home ec classes anymore that teach credit. No home ec, by the way, I even have some of my clients tell me that they don't even understand stocks. This person right here may be a little unusual, but I was trading stocks on a Texas Instrument computer, virtually Pan Am stock, at probably 8, 9 years old. So, but I loved computers and I loved computer games. And so I was involved with stocks early on. I don't know that I had any formal training with them, but again, they're not teaching this stuff anymore. This is not in your schools or anything like that. So this is why we're doing the things we're doing to educate you, because the more education is confidence. And then the more confident you get to buying a home and understanding the process, it's not as stressful. Because the minute that I tried to buy a house, or I thought you were going to judge me. By the way, not him, the mortgage person at the time, right? I also thought, outside the judgment is like, this is a commitment. A lot of us in general are afraid of commitments. It doesn't matter if you say, hey, Pam, do you want to go to this event with me in 2 weeks? And I'm like, oh my gosh, that's a commitment, right? Like, that's how I feel about it. But commitments are a huge piece where people it adds stress. So I think with what you're saying and the things that we do with people, I think it's very important. And I don't think people take that as seriously. So do you see in the future, with how things being the way it is, maybe I should ask you this question, this thing. When I went to a seminar and we talked about this, that the difference between someone renting and someone buying a home, that it was significantly different in the wealth of a person, which causes problems in our community. So do you want to kind of talk about that piece of it?
Yes. I mean, what's the statistic flying around? It's
It was
the homeowner's net worth is 40 times greater
That's what it is.
than a renter. And,
Yeah.
it's kind of tough to imagine that on the surface, but this would be my plug for you to come to the event if you want to
Yes.
see it broken out. But it's really the power of compound interest over time, right? The longer you own that home, the more equity you're earning through appreciation and amortization, it becomes a very powerful tool.
Mhm.
And I'm the first to tell people, right? People who are looking to purchase or get into real estate investing, real estate is not a get rich quick scheme.
And being a realtor, it's not either. I don't know. I don't know why people think that. It's not. It's a lot of work.
It's a lot of work, right? And
Yeah.
it's time in the market meets, what does that say? It's time in the market beats
Mhm.
timing the market.
Right.
And that's really literally the case, right? The earlier you can get into home ownership, the more benefit you're going to see
Right.
over time.
Right.
And real estate is really an amazing stepping stone to position yourself to be able to accomplish other things in life,
Right.
right? Maybe it's to continue building a real estate portfolio.
Mm-hmm.
Well, guess what? The power of that equity you can now utilize to purchase other properties.
Right.
Or if you want to be a business owner one day, right? I can't tell you how many people capitalize in on the equity they've gained to be able to start a business.
Mhm.
I'm trying to think of other avenues. I mean, there's many directions that
There are.
you can go.
Well, even to your point, a lot of times, by the way, if you have a 401k, please contribute to your 401k. But
Yeah.
when it gets to that time when you're retiring and downsizing and stuff, sometimes your home can truly help push your retirement fund to a whole nother level. So, again, I want to hit on something that's completely off the topic in some cases, but when you see stuff on social media that says, the government's talking about fair housing and trying to fight the housing crisis, they use the word crisis, and you're like, why do they care if I own a house or I rent a house? Well, it's because of these numbers. I didn't know these numbers until 6 months ago. Obviously, I know someone owning a house, as long as they bought the house at the right price, they live in the house, there's going to be some equity. I'm never going to say you're going to be a millionaire, but the housing situation does really create I'm going to say a demographic change, because what happens is that certain people who are being educated, and I say certain people, that means and by the way, it really turns down to demographics of what kind of person you are. If your family owned a house, you likely own a house. Someone whose family rented all their lives, they're renting too, because they don't have the education and the power. And I say education, I'm not saying to go get a college degree. I'm saying coming to our home buyers event, having a conversation about how you're building and investing in yourself. So what's happened is there is a huge crisis with our county, that people are tending to rent versus buy because of the I'm going to say the low top. By the way, I'm going to get this right. The low cost to get into a rental compared to buying a home.
Yep.
And forgive me, I hope Justin can edit this, but my point in that is that's why they're hosting those grants. So the reason that they're having these grants and these different programs is trying to level the playing field of our community to where we don't have poverty, based on the fact that these landlords continue to increase these rates. And we're at 14 to 21. I think I'm seeing a lot of 22, 2300s in rent right now.
I believe it. I haven't talked to somebody recently who was under, I probably put almost 1500 as a baseline.
Yeah. So 1500. So if you take that money right there and you put it to a mortgage, that might only be like $140,000 home. But again, in the grand scheme of things, I'd rather buy a house for $140,000 than pay someone $1,500 rent. So while I say this, when you're talking about your county executives and your mayor and those people, they see the numbers, and the numbers are a real thing, to where once you get stuck in that rent cycle, it's hard to get out of it, because you got a landlord, and when the lease is up, and then you got to try to get the money. And a lot of times when you're renting, it's hard to save for buying a house.
Yeah. You're 100% right. And I think it's never too early to start, whether you're ready to purchase now or not.
Yeah.
Just really think about your long-term goals and work slowly to those, and you'll be surprised.
I mean, the plan, we're not saying we don't want you to buy a house tomorrow. I don't even think in our
no, exactly. Like, you come to the event, it is not a pressure to purchase a home. It is literally, you are building connections. You're as powerful as the circle around you, right? So if you have direct access to a real estate agent like Pam, direct access to a mortgage loan advisor like myself, an insurance professional, a home inspector, having people in your corner is so essential to help you execute on that plan.
What's funny is that when we're doing these events, and I've been doing these events for over 10 years, them seeing the attorney for some reason seems to be a big deal.
I forgot about the attorney.
So what's funny, and as we're talking, we're kind of closing up on this about, the process of buying. The event's going to go through the whole process. Cole does a very good job going through that with you. But the interesting thing is that our attorney is paying for the drinks, and it's probably because he needs to pay it back, because there's some times when people are at closing table and they're crying, and usually it's good tears. but there's a lot of emotion going to the closing table. So it's so nice for them to see, for people to see the attorney that's going to sit down and help them sign away, not their life, but that's what we say, sign away your life. But you see him ahead of time. You get to meet them, you get to interact with them, and there's a connection. So I think a lot of times those nerves that you have about the buying process, the minute that you get to meet the team up front, and we have such a good time at our events.
Oh yeah.
Yeah, there's free food, free drinks. We have scavenger hunt that we're going to be doing. Everybody, if you can see it, it has our marble. Here's our marble.
Yeah.
There's our marble. This is scavenger hunt prize. We have a PlayStation 5 that we're raffling off too. And I think the question is, why do we do this? And Cole, what's your reason? Because
honestly, I'm an educator at heart. Really, I really just enjoy, giving back the knowledge that I've learned. Right, I feel like I've been so blessed in my life, right, to be equipped with so much knowledge and all these awesome opportunities. So really, I just want to be able to give that back with no strings attached. So that's a key piece of it for me. And I'm just I love the community and just love connections. Right, I'm a very personable person, just in case you can't see that.
Right.
So I just enjoy getting out to hear what's going on with individuals and just
I think it is good. I think it is good to you hear people's struggles, you hear why people came, you hear what their goals are. And I think doing this event for the last 10 or 11 years was that for myself is that it was a hard experience to buy a house. I didn't have a home buyers event. I got to they didn't even do those things when I was buying a house. Yeah, I'm old. I'm gonna just put that out there. But the internet was around when I bought a house. But it was stressful. And the people that were there, they swapped me up, if that makes sense. So the realtor would literally show me a house. In my head, I don't even know if I'm pre-approved or anything yet. I mean, we talked to the bank, we were assuming, but nobody was talking. And I was not educated enough to understand the process, to understand while they're both kind of working in hand. And I'm saying to, my husband, I'm like, can we afford this house? Can we not afford this house? Like, do I want to fall in love with this house? Do I not? And it was a stressful situation because they would say, oh yeah, you can approve this house. And they told me what I paid for my mortgage. I'm like, yeah, I can definitely afford that. And as we're going through the process, they're like, okay, well, you only need this much down. And I'm like, okay, well, we have that. Like we got that much money. And then all of a sudden, we're getting into where, yeah, we wrote an offer on the house. Yeah, we had the inspection. And all of a sudden, they're like, oh, okay, well, you need to double that amount. I'm like, where am I supposed to come up with that money? Like, yeah. And then in the very end, what was interesting, and thankfully, this is the one connection that I had was my attorney, who was our closing attorney. He actually was a family friend, that I had for a while. And he all of a sudden sends us a number after we're resolving, and I'm borrowing money from my brother, having to get a little, little letter written from my brother, right? Saying he's gifting me this money. But he's getting his money back because he's my brother, right? But as we're talking about this, my attorney sends us a letter saying, hey, this is your potential closing cost. The letter for us to go to closing was double than the amount that we were told. So you went back all the way to the beginning. This is how much it was. Now it's double. And now it's, more than that. So I call him. I'm almost in tears because I'm like, I'm not showing up at closing because I have all this money, right? Yeah. And he said, Pam, it's an overestimate. He's like, whatever they told you at the bank is the amount of money that you have to bring. I'm like, I'm not showing up unless that. He's like, I promise you that's going to be the amount. But I had that relationship. Like I could call him. Most people don't have a relationship to call their attorney. In this situation, you do. When we come to a home buyers event, the attorney that's working with us, you can call him and ask that same question. But with the new rules that have come on, when you guys get your numbers and your numbers, those numbers that the attorney has are usually identical to what the mortgage is now. Some of the new rules have changed, things like that, to where you didn't have that stress. So for the reason that I do this is because it was a stressful process and nobody was really helping me plan. In fact, they were helping me fail to plan because I was failing. I wasn't sure if we're going to get there, and we got there. And I don't regret the decision, but it was a lot of stress. And I don't think that it needed to be stressful. So, and that's why we're hosting this event. Do you want to give them the details?
Yep. So the event is going to be held on Wednesday, right? I think it's Thursday. Thursday, February 6th.
I hope he doesn't show up on Wednesday.
Yeah, don't show up on Wednesday. All right. So Thursday, February 6th, where registration starts at
6 o'clock. It doesn't start until 6:30. So if you're working till 6, feel free to come. We are, when you get there, you get raffle tickets. If you pre-register, you get extra raffle tickets. I think Caitlin's going to be offering extra raffle tickets. We have multiple things going on. I think he's going to go through some Q&A stuff. You're going to meet the team, and we're going to be pretty much just answering a lot of questions. But why wouldn't you want to get your answers to your questions, get some free food, win some prizes? Because we have some good prizes too. Besides the PlayStation 5, I think we've got an Amazon gift card and a couple other things that we've got going on. But I can promise you that this is all us invested. We're bringing the prizes. We want you to have a good time, and we want you to have your questions answered in a fun atmosphere, and that's why we do all this.
I can't wait, Pam.
Yeah, thanks.
Yep. Hope to see you guys there.
So he can do the
Yeah.
oh maybe.
Stop it.